Hello, and welcome to our 50th edition of the Trading Opportunities webinar. This is your host, Nirav. So, good evening and good afternoon to you guys, depending upon the time zones you are in. And of course, good morning if I forgot to say that. I'm currently loading up all the required applications at my end. So, if you guys have joined in, please do make sure to let me know. Say hi in the comments and also, of course, let me know how's the audio and video share for this particular stream. Okay, it looks like at least at my end, it seems to be working fine. 2023. Hello, Steve. Thank you for letting me know that. How are you doing today? And I can also see there are 4 or 5 more people currently online. How are you guys doing? Okay. Hello, Fraser. Disclaimer. Where is that? Hey, Guru Manoj. Hi. Steve is saying he's well. Let me also see if the chat thing is working. Hey, Sachin. Looks like you are the new guy here. I haven't seen you in previous chats. Okay, so it looks like a lot of people are already online and everything working fine. So let me just quickly start off with the legalities and then we will run over to our webinars. So first of all, guys, here on screen is the disclaimer suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, then you yourselves will be liable for your profit loss or loss of profit. Rest of the information you can read yourselves on screen. So with that out of the way, let me give you a very quick introduction before we actually begin the webinar. This is for the newcomers and also for the people who will later watch this stream online as a recording. So guys, my name is Nirav and I'm the admin and owner of 50 Eyes Market Analysis website and also the YouTube channel named 50 Eyes Market Analysis, where this stream is currently being broadcasted live. Also, it is being broadcasted on LinkedIn. If you are currently live there and watching it there, do make sure to say hi, right? And going further, we have currently done 49 of these webinars already. Within these 49 webinars, which you can see by scrolling down on my YouTube profile, we have caught 58 big trading opportunities, right? I think 3 of them we caught in the 48th webinar itself. We will check what happened in the 59th today. Okay. And this is the 50th webinar, right? Which is a very important number as 50 is a big number in my understanding and also something or somewhat of a target. I wanted to do at least 50 of these webinars before deciding what to do with its future. Right. We'll talk more about it in the webinar. And going further, I am also the author of the book Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Waves, which is available on Amazon's Kindle platform for instant access. And lastly, I would like to show off my 6 years track record of 80% plus accuracy, which you can see in these spreadsheets. 2021, we had an accuracy of 82.22%, 2020, 88.52, 2019, 84.88, 2018, 84.61, 1787.5 and 1683.34. Right, the way these accuracies are calculated is that if you scroll down you will find that there is the date, the instrument name, the analysis, and the actual video, and what happened with the analysis is listed here. If it worked out or if it did not work out. If it worked out, we have given it a +1. If it did not work out, we have given it a -1. And let's just see by scrolling down. As you can see, 54 out of 61 worked out, so 88.52. Why do I show off this accuracy every time we do these webinars? Is because this is extremely high compared to what the industry's track record is. Even a 60% is considered high. So I always make sure to point out to you guys that you are listening to an expert in his or her field, right? Anyway, so that's about it for the quick introduction. And of course, lastly, you can follow me on Twitter. Handle is 50 underscore EYES, right? All updates regarding these webinars, timings, and anything new are published here. Of course, YouTube is a platform for videos, so quick updates, if any, I will obviously publish here. That's about it for the quick introduction, and let's now head over to the actual webinar, right? And let me just quickly check if there is anything I missed. Sachin is saying that's true. I do follow your videos though. Well, that's good to know, Sachin. Chal, I'm back. Hey, Chal, nice to see you. Hopefully, you are doing well. So, guys, with everything working out, now let's first start off with the webinar, right? So very quickly, I'll just like to let you know that we will follow this pattern: Euro USD followed by EURCAD, USDJPY, EURJPY, Crude Oil, Gold, S&P, Nifty, and BTC. And if I see a good number of participation from you guys in the chat section, I will also discuss my big trade, which I have already told you guys that I was carrying in the last two webinars, I think. So we will discuss it. As I said, if I see good participation, after we have discussed the currencies and yeah, after the commodities actually, near the index part, because I was trading in the indices, right? So keep the participations high if you want to hear the whole story about the trade I was in. So that's about it. Let's now head over to the actual content here. So first of all, on screen we have the chart of Euro USD. So Euro USD, it is working out precisely as we expected it to, right? We had two biases. One was for the downside, or our main bias was for the downside, and the second was the invalidation level for the downside movement, which obviously has not played out. The downside has actually, the downside was triggered when the market crossed this low, right? And then the idea was we can add some as it goes higher, or add more as it goes lower. So this exceptional movement has provided us the opportunity to add more to existing longs if you were in. If not, they have already provided us another opportunity to enter short risk or low risk short trading opportunities, I must say. Right now, what is the count and what are we thinking about in terms of the current scenario? By the way, guys, just one quick thing. If you are watching this broadcast for the first time, do keep in mind we were tracking this opportunity since a long time, and we were already what do you call thinking that it might follow this pattern or this path. This was discussed in the last 49th webinar as well as the 48th webinar, and I think one or two webinars before that also we were discussing it, because this pattern has been unfolding for quite some time, right? So if you want to check how we tracked it in the live market, you can check in the past webinars. Getting back to the current discussion, majorly I think it might be progressing in two ways, right? First, it could be progressing like a corrective structure to the downside, basically a WXY correction, right? So, and the second way is it could be forming a impulsive structure to the downside. Again, both of them are suggesting more downside, and the only problem is not actually a problem. The only thing is that in the WXY correction, the expected downside is just to take out the low, which it has done by a very small value, but it has theoretically taken out the low. So the wave Y can be theoretically considered as complete or the safe zone over, but I do not think that's the case. I think that this is just the A leg of the Y. One second. Yeah, A leg of the Y followed by the B leg of the Y and will be followed by the C leg of the Y. So what am I talking about? A leg, B leg, etc. I'm just quickly run down the rough outlook of the Elliott Wave structure. We are thinking of basically a double zigzag structure here. A double zigzag structure consists of A down, B up, and C down kind of structure, which we label as W. So this is your A down, this is your B up, and this is your C down structure, right? Now it is followed by a connecting wave X, and then again an A down, a B up, and a C down kind of structure. So again, this A down, B up, and then this C down kind of structure. So basically, this is the reason why I'm expecting that more downside should follow, right? However, the basic requirement of this A, B, C structure is to just take out the low. That's why I was saying that the safe zone is over. But as I said, this looks extremely bearish, and it's better we take the chances on further downside. So see, the strategy here is if you were following the webinars previously and you already were able to capture the move, well then good for you, and you can just trail it according to your entries. If you were not able to capture the move, then again good for you, because it looks like it has already started the pullback after touching the target minimum, which was the low of 1.05243 roughly speaking. Now the idea here is now to wait and watch and wait for something like a three-way pullback. Roughly speaking, it may look like this. Of course, this is just a rough outlook. In the real market, it might form something weird looking, or something you may not see at first look, or may be able to spot at first look. So a three-wave structure basically means first leg higher, correction, and then another leg up, right? So this is the kind of structure, this is which we will be looking to track in this counter right now, right? So if we are able to properly track the end of this leg, right, then we will be looking to re-enter shorts. So it is swing perspective a short, which we have, as I said, already discussed, right? And from the current situation also, it is a wait for shorts. So if you are not short already, again it's all right, and we'll wait for this corrective structure. Now how this corrective structure will unfold and whatnot, will only be able to spot in live market. The only actual thing which we can do at this point, which might be of some help, is first we will have to assume that this is the A leg complete, and then second thing we can do is we can draw our 50-60 retracement zone. Again, keep in mind this is just a rough resistance zone. The market is not required to go to this level, right? So I personally think it will not go that high, because this trend looks extremely bearish. But if it does go to these levels, then we, as I said, will look for possible reversals in that zone. And let me just quickly check what that level is. It is somewhere within the range of 1.0688 to 1.0605, right? So between this range, we may see a reversal, but as I said, the market may reverse much before it, right? So that's our quick outlook on euro. We are already swing perspective short, and expect more downside to follow. Let me know, guys, if you have any doubts, questions, or queries on this counter before we move over to the next chart. Okay. There seems to be some comments in the chat. Let's see. So here's a comment from Guru Manoj, is where can this stop loss for the present position? So I do not know what your entry is, so I do not want to suggest any stop loss. But if you are able to capture the move and you are able to take the entry, that you do not lose anything. If not, you can use this resistance box which I have drawn, right? Again, these things are more or less biased towards the actual entries, so I cannot suggest much of anything. Okay, Charles and Jill are clear, so is Fraser. So thank you, guys. Let's now head over to the next chart. Oh, it looks like we had a chart reload, whatever. So yeah, let's now head over to our next chart, which will be the discussion on EURCAD, which is sort of not moving as we discussed the last time. Can you guys confirm if my feed is currently running fine and you are able to hear me? If you are able to hear the audio and see the screen share, just uh, let me know, because we seem to have had a reload. Maybe that was an internet connection getting lost for a moment or something. In the meanwhile, I'll just continue. So 15th, okay, Jill is saying yes and Sachin. Okay, thank you guys, Jill and Sachin, for letting me know. Now let's move ahead with our next one. So EURCAD, right? Thank you, Fraser and Steve. So EURCAD, what we were thinking was, actually, let me just quickly run down what we have been able to do so far. So in EURCAD, we have been able to capture, first of all, this leg, and then we took re-entries and were able to capture this move, right? In this move, our bias was when we discussed it last time, which was on 13th of February, around the same time. Let me see, 13th of March, sorry, around the same time. So yeah, at that point in time, we were somewhere over here, and we have already entered somewhere over here within this range, and we have captured this much movement. The idea was that we expected that this market will continue higher, so the idea was just to keep trailing our what do you call, positions, right? And the idea also was that if you were not able to take this entry and this big move you missed out on, then we were also thinking that after this market completed this correction, that it will continue higher, and you will have another chance to re-enter this market, right? So based on that, we were thinking just trail and trail. So obviously the trails must have been hit wherever your trail was. You must have booked out in profits, right? Because it almost went near our entry, right? That's the importance of managing your positions and not just blindly taking a position. Anyways, now the important thing is, what is this market doing? So we were thinking that this will form a 4 somewhere here and then go up for a 5, and then it will at least give us one, if not three, upward movements. Nothing like this has happened. So two things are possible: either this count is already finished over here, right, or it is still forming upward structure, just not the way we expected it to. So what do I mean by that? If it is still forming the upward structure, let me just explain that scenario. So if it's still forming the upward structure, then this deep leg would be again some wave 2 of a lower degree. So what that basically means, we have a series of nested impulse to the upside, wave 1 over here, wave 2 over here, and then it is followed by another wave 1 of lower degree and a wave 2 of lower degree, let's say dot 1 and dot 2, and then it should be followed by another wave 3, right? That's what I mean by basically saying that it may still be continuing. However, this fall is again quite sharp, and it looks like all the Europe pairs are more or less experiencing this kind of a movement. So I'm not particularly interested in re-entering this counter anytime soon. What I'll do is I'll place an alert near a region of, or what you call, level of interest, and just forget about it. If it really is able to manage a movement this big, then I'll be interested in possibilities of taking longs, right? And also, since we were in this trade for quite some time, what is this? 6th March, and around 13 March it went up and then started to go around 14 March and 15th. So let's say around about a week, right? So hopefully some of you guys were able to enter it. If you were, please let us know by typing in the comment section so that our audience can also note that you were able to capture this opportunity, right? So that's about it for EURCAD. I'm not interested in trading it, and the long setup, which will, if possibly, comes our way, is not right away. It will take some time of its own. So wait and watch on this counter. Let me know if there's anything in specific you would like me to take a look at on this chart. Otherwise, we move over to our next discussion of USDJPY. Okay, Charles and Jill. Okay, it looks like there is nothing new here or no questions as well. So let me load the next chart. Thank you, Fraser. Okay, so USDJPY is not really, this is not the count we were following. I think this was the one we were following. Yep. This is the count we were following since the last 2, 3 webinars. And I have very clearly mentioned it multiple times that I'm not very happy or interested in this count. And I think it will need a complete do-over from the ground up. I'm just not having the time to do it because it can take a few hours. Not always, but sometimes a complete do-over may require that much time. So we were trying to fit in the last structure without much of emphasis on the past movements, and it seems to have not been working out really well. Last time when we did the webinar, we were somewhere around 13th February, March. So we were somewhere around here, right? Roughly speaking. And our idea was that if this structure is correct, that is, if this is really an A up, a B down, then it should be followed by a C up, right? So based on that, we already had a setup that if it goes uh, above the trend line, then and then gives a retest, which it actually did give, sort of. I will have to check it in greater detail, but yeah, on first look, it does look like it was forming a pretty good setup. Then it's a long opportunity. However, soon after it did start to go up, it has gone down and already taken out the low. So not really what we were expecting out of the structure. So what is this market really doing? Let's quickly have a look at our past count as well. In the last count, we were of the view that this was a WX and a Y. So now the update, one second, let me check this. Curl A and B. Got it. Hmm. So X. So one thing is clear here. We were tracing this wave B, right? Now it looks to me like if I redo the counts from this point of reference, which is around the price level of 127.26, roughly speaking, then we will be able to consider this as a completion or possible completion of a move, right? So if we consider this as a possible completion of move, let's say possible completion of wave B, then that also suggests that we are now heading down for the wave C, possibly. Again, I'll have a look at it again before we do the next webinar. But for now, this is what I can consider from the first looks of it, right? Now, if we ignore, by the way, let's just ignore the data on the left because we are not really looking for it. We are just interested in the part from here or from the point of reference around the price level of 137.92. Right, from 137.92, it looks like we have completed an impulse here. And if it is heading down for a wave C, then it should have a proper 5-wave structure. Now, what do I mean by that? For those of you who are new here, a proper 5-wave structure would look something like this, right? So basically, long story short is there is a possibility that this was just the one, this was the two, will be followed by a 3, 4, and then a 5. Let me correct the degrees. Okay, so this is just one second, one more thing, 1, 2, 1, 3, 1, 2, 3, 4, 5. Hmm. Hmm. Okay, so here is my current outlook. I think that corrective structure which was forming to the downside, a triple zigzag formation, may have completed itself over here at the point of 127.229. So this becomes our new point of reference, right? So if a correction has completed here, then either it will go up as an impulse, very likely, or if it's inside a complex correction, then perhaps it's just a big continuation on a high time frame that I will have to check. So since we are not going to check the high time frame right now, what I think may be happening right now is that we might be seeing a progression of a diagonal. Now in the progression of the diagonal, this is the first leg up. This can be taken as wave 1, or it could also be the part of correction, so maybe the A, but doesn't really change much of anything for us, and the correction continues for the wave 2. So if this really is the count which is currently forming, as I said, I will have to relook at the whole picture from the perspective of a higher time frame. But speaking from what I could gather right now is that this is the support region we are looking for, right? And if this is the support region we are looking for, then we can just quickly remove this stuff. So then we are looking for a possible support forming within the price range of 132.559 and 131.264. It has already touched the upper part of it. So most likely it will go inside and try and test the lower part as well. And the way this particular structure looks to me is it looks like a possible zigzag in play. Let's just leave it as is. With the current wave A already complete, and the B may have completed here or it may be continuing, right? So whatever the case is, we expect that the C will at least go near the 131.2628 level, 131.28 level, right? So what I mean by a zigzag structure is basically something like this, that this point of reference 137.89, we have a wave which is called the wave A. Then we have a correction in the upward direction which we call the wave B, and then a new down leg called the C. Excuse me. Right. So this is what we expect out of this market. It has already done the first part. It has already done the second part. So wave C may either be in play, or as I said, if B is continuing, then it can go sideways for a bit, and then the C might show itself. Right. Things of importance is that although the B can also continue as some more complex correction, I think I'll be less inclined to consider this count correct if it really goes above the nearest or the level of 135.06. Okay, so this is our expected progression on this counter, or my update for the USDJPY chart. Further things to note here are that the ABC structure, the minimum requirement for wave C is that the C goes below the A, right? So here this is the end of A, and if we look at it, C has actually gone by a very small value below the A. So if we consider this as the A, B, then C has already gone below it, right? So it does happen that sometimes the markets complete the structure like this, but it is very less likely. So long story short, I will continue to track the price movement from here on. And if I see some sort of clarity, I will look to consider some selling opportunities here based on the same analysis that C may have some more downside remaining, right? And our price targets remain very clear in this white support box within the range of 132.559 with a bias that the market most likely will go towards 131.299. sorry, 131.28. So that's about it for our discussion on USDJPY. Again, as I said, I'll have to relook at it, but this does seem to be fitting the current narrative rather well. Let me know, guys, if you have any doubts or queries in the comment section before we move to the EURJPY chart. Hey, Philip Calphone. Good morning to you. Fraser, Charles. Thank you, guys, for the confirmation. And Jill and Steve. So let's, and Philippe, of course. So let's now head over to our next discussion. That's not the chart we are following. This is the one. Okay, so this is the chart of EURJPY that we have been following since the last few webinars. And the last view which we discussed in this or on this chart was that we expected that the market was in this kind of structure where 1 second, let me do one thing. Let me just check the 4-hour chart very quickly. Hmm. First of all, from this point of reference, which is the price level around 148.32 mark, we call this as our POR. And we were of the view, by the way, this view was discussed long back when we started the webinars, and we have been following this count for a long time. Right. So first of all, I like to mention that I recall very clearly we were able to capture part of this move and this move, and we were also able to capture part of this leg up and some parts within this move up. Now, the idea has always been that this was some sort of corrective structure going in the other direction, right? When we discussed the counts last time, we were of the view that maybe this wave B was still continuing in the other direction. We got a little bit too sidetracked on the shorter time frame analysis to consider the bigger picture. In the bigger picture, it is quite clear that B may have already completed here at the price or near the price of 145.63, right? So what does that basically mean is that in Elliott Wave terminologies, if you have a structure down and it's in the zigzag formation, then the first leg will be called an A. And once the B completes, we see another leg down, which is called the C, and which should take out the low of wave A, which is currently standing around 137.38 level. So long story short, if it really is the high of B, then this, which quite nicely looks like a leg down for C, should take it lower than 137.36. Right, so this is one thing which is clear to us. Secondly, if this B is still continuing, then maybe it can even go higher than the last high. But given that there is an extremely strong bearish movement here, now how do I say that is extremely strong? I don't have to say much of anything. You can just check this bar and check this whole of this box area. There is no bar which is equal to it. So this is a what you call basically a change in nature in simple, let's just say, price action terminologies, and it is suggesting that our count is having a good probability of being correct, right? So now again, getting back to the longer picture count, we may have completed the B here, and if this is heading down for the C, then we will need to recount this structure as a possible impulse heading in the downward direction. Let's see if we can do it from the first looks here. It looks like we may count this as a wave one up, a two, wave one down, a two up, and let's say a lower degree wave 1, a Roman 1, and a Roman 2 does not go higher than the wave 2, so it may very well be the 3 and may very well be followed by the 4 and then the 5th. So this is one of the possibilities which I think is having a very good weightage right now. And actually we did consider it. Where is it? Yeah. So as you can see, we already did consider this as the A complete here and possibly B complete here. But we were considering it as just one of the possibilities because there was a question mark. But given this letdown, it looks like we have to consider it more seriously. So what we have to do is redo the analysis from this point of reference around the price level of 145.5, with the current price action being considered as a impulse or possible impulse in the downward direction. Let me know, guys, if you guys are clear till this part. Okay, Charles and Luis, Herv and Steve and Jill and Philippe. So, guys, it looks like you guys are clear on the count. So, now in that case, let's me just make a few more points very clear here. So, first of all, if this really is the actual count, then we do not want the market going back inside the wave 1, which is 141.392, because that basically is not possible because we are thinking that this whole structure down is a wave 3, and wave 3s do not have an overlap between 4 and 1 because this is the internal of it. So those of you who are following me for a long time or having even the basic knowledge of Elliott Wave should already know what it is. But those of you who do not, just keep in mind that this count falls apart if this market goes above 141.349. So any movement above this means something else is happening. Now, what is this something else? I think I may have figured that as well. May have. So it does not look very nice, but maybe a diagonal formation happening here. Again, I do not think that's the case because it is a little bit too much of expansion in this diagonal. Just keep this as a tertiary or even a lower degree count just in the back of your head. So long story short, if this market is really following this count, then we do not expect this market to go, or we do expect this market to go or and turn around 140.79 level, which is also the 23.6 retracement of this leg down, right? It will most likely turn before this level. So basically what I'm going to do is wait for some sideways price action here within the range near 140.79, right? So once we see some sideways price action here and it is clear enough to me, then I'll look for some entries for the downside. That's basically the main theme which we are going to do on this chart for now. Hopefully that's about it for this discussion. Unless you guys have any doubts, we'll now move over to the chart of crude, for which I have already gotten 2 alerts on the downside, but I have taken no entries, which we'll discuss via very soon. Thank you, Jill, Fraser, and Lewis. Let's now head over to our chart of CL. Right. So it actually did the downward movement. So all these alerts become pointless for the time being. So guys, if you are following me on crude oil charts for the last few webinars, we have had a situation where we did not know what was happening. It was basically unclear for a lot of time or a long time, right? I must say, but we were able to do one thing. We were able to recognize two patterns. One was for the upside, which obviously has gotten relegated, and one was for the downside, which is what we are going to discuss right now because it is getting followed. The downside, we had a very clear entry level. I suggested that below 70.91, basically near the low, we will look to enter shorts. Actually, we had a better entry. Let me just quickly point that out. The better entry was that if the market goes below this trend line and sustains below it, then we will look for shorting. So what happened when we were discussing it last time or during the last webinar was the market did go below the trend line, but only for a very short time, right? Very, very short time. So I was not interested in taking shorts because it did not establish itself below the trend line. But later on, I did get the alert and it did go below the trend line, established, tried to pull back as well here, rejected, and then went down. And again, it also triggered our extremely conservative entries, which is taking out the low and has been diving in deeper. Hopefully, if you guys are following me, you would have been able to follow and take some trade out of it, at least one, if not two, because it has given us at least 2, 3 opportunities since our last discussion, right? Okay, looks like I took the short in crude. Okay, so Steve here is catching all the trades. Last time I remember Steve was also able to catch our S&P downward movement. So that's nice to know, Steve. And it would be nice to see other participants also following the what do you call trades that we discuss. Right. So, anyways, that's about it for the short entries. If you were able to capture it, like Steve, well, that's good for you. If not, then there is, I do not think it's a new entry coming in anytime soon. This was a long time formation, but keep in mind because this is a long time congestion, I expect this market to fall a little bit more lower. And personally, there are many or multitudes of analysis I can do, but there is another strange problem here. If we go on the higher time frame chart, the current lower time frame is suggesting much further downside, but on the higher time frame, we have counted it as correction downside, right? We have counted it as a W, X, Y, X, and Z, right? So what we can do is we can also use these last measures. We can measure the W's and the Y's to figure out what the Z might be doing. So if you look at the W, it was this much big of a move. Generally, Z, we expect it to be a little bit lower. And if we look at Y, it was this much big. So it's bigger than W, right? 48 points almost. So long story short, the targets are coming in quite deep. I do not want to use the W target, sorry, Y target because it is quite deep. But it is suggesting that possibly the Z may continue a little bit lower. And as such, the second reason I have for thinking, let me remove this drama from here. It's irrelevant at this point. Yeah. So as was I was saying that there is a possibility the market can head over to 43 level, and secondly, the congestion here has been extremely big time wise. Look at this. This is the pure congestion here, but it has also followed. If you follow the past data here, it has been there for quite some time, right? So based on all this, I think the best course of action would be to keep a lookout on further possibilities of short trading opportunities. But as I said earlier on, I think the market may move down faster. So the better opportunity will just be to trail and trail. And yes, exactly, that's the point I'm trying to make here, Steve, that long congestion should give big move, right? So what else? What else? What else? Immediate short-term targets, we can see support around 64.4. This is based on simple price action understanding of this counter. Once again. So we can face some support around here 64.4 to 62.10. Rest you can just manage yourselves. I'm not in this trade, and the reason is I was heavily trading indices, and you guys already know I was saying that I was net short. So we will discuss that trade next. Sorry, next to next after gold, right? So that's about it for SN. What do you call WTI as crude oil? We are currently holding shorts on this counter. I'm not holding shorts, but we discussed it previously and they have triggered. So it's a short currently running. Keep trailing. We have just discussed the rough outlook of further downside. Immediately support incoming around 64 something, 64.4 something, and furthermore it can go to much lower levels, right? However, do keep in mind it's currently being discussed as a WXYXZ count. So Zs generally have the tendency to not go as deep as their W and Y counterparts. So do keep in mind that this is just for rough outlook around 44. We do not really expect it to go there, right? So we will see how it proceeds further on. And that's about it for this. Let me not waste any more time on it and head over to gold. Yeah, of course, if you have any questions, you can just post them in the comment sections while I load on the next chart. Or do type in clear. So Charles is saying clear, and so is Philip. So thank you guys for the confirmation. What about the other participants? Thank you, Jill and Fraser. So guys, let's now discuss our chart of gold, which is exactly moving so far as expected, but it has gone and given us extremely big move. Okay, second. Thank you, Sachin and Louis and Steve. So now let's discuss the actual chart of gold. So see, we have been discussing this chart for a long time with the same count. And the count has been that we expect that this is possibly a diagonal, which started around the price level of 1960, right? And then went down for wave 1 or A as a diagonal or leading diagonal, contracting leading diagonal till 1804. From that point, I suggested that this might be forming a flat around here. Once again, so around here, our view was that this might be forming a flat structure, which would basically suggest that a possible continuation or completion, sorry, near 1860 level. So we were expecting that it will complete itself around 1860 level. However, it showed extreme bullishness. Based on that, we redid the analysis and we figured out that the next resistances lie between 1880 to 1900 level, and the last resistance lies at 1925 level, or the last clear resistance, I must say, lies around 1925 level. So first of all, after we recognize this fact, we were waiting for some possible reversals in this zone. Didn't happen. Went above it very fast, or short above it, I must say, right? Then the next level is currently being tested. It is currently around 1926 level, which is our last clear resistance for possible reversal, right? And it is also not, it also has not given us as of yet any, what do you call, clear sign of reversal or weakness per se. So what I'll do is I'll just move my trailing alert line, not trailing profit or stop. Right. So the idea is that if this count is correct, this market can fall. Now, however, I have doubts about that. The reason being that if the S&P continues the downward movement as it is seemingly doing right now, then gold may become more bullish than we expected it to become. Let me move it here quickly. So in that case, what will happen is it will take out the last high, invalidate this bearish count, and then it will continue higher with our bullish outlook, which we have discussed, I think, 5, 6 webinars ago when we were discussing the possibilities that this might be a correction heading lower and then an up leg might come in place. And later on, we changed our main outlook to not a correction heading lower complete here, but a connection continuing like this. So long story short is a lot more depends on S&P than the exact chart of gold. Basically, if the downward movement continues as we will discuss in the next chart, then we expect that the gold might start doing something other than this bearish count. For that reason, I would also like to remain aware. If it goes near the last high, then most likely this downward count is relegated. At that point, let me see if we have already done the analysis for the upward movement or if we need to do it right now. Hmm. Could be at that point a simple case of nested 1-2-1-2 formation. We already can label this as 1 and 2 as we have discussed in the past webinars. And this has been labeled as a 1 and 2 again. So this could be a nested formation for 1, 2, and 3 again, heading higher. This is just one of the multiple outlooks that are possible. Let me check one more thing very quickly. Yeah, it does not look like the best count out there, but it is what it is, right? And we do not have any trade on this counter right now as well. So we can just let it go and come back to visit it later on. So, but for making the long story short, we expect that we might be seeing some nested ones and twos, and this might be some lower degree one, this might be some lower degree two. We of course may need to recount it, but the idea is that if this count is correct or currently running in the market, then huge up move might become visible. And as I said, it depends more on the S&P counter. So we'll leave it as it is. No clear trades on it for right now, unless of course it takes out the high. At that point, it becomes a swing long with a stop loss near the low. But I'm not so sure how many of you guys will be interested in a trade like this. I personally don't care for trades with this big of a stop loss. But yes, technically, if you have the money to hold it and you can create a big size position enough without this big of a stop loss affecting you, if it does get hit, then yes, it's a swing long. So we'll leave it as it is. Let me know, guys, if you have any questions on this count. Otherwise, we move on to the more important chart of S&P's 500, followed by the Nifty 50, and lastly BTC. Thank you, Charles and Steve and Jill and Fraser for your kind confirmation. And one more important thing, guys, if you have not hit the like button yet, make sure you take a second and go to the stream wherever you are watching it and make sure you hit that like button. And also, this is the 50th webinar, so that means we have come a long way since we actually started doing this for the first time. It would be nice that you guys share it with your friends and colleagues, right? And let me just quickly check one more thing here. Yeah, so crude oil trade is also working out. So I'll just quickly edit out our number of trades that have worked so far. And yes, at this point, I think it will be wise that before moving further ahead, I take a moment and discuss with you guys. One second, I have a question here which is gone unattended. Luis is asking, can a quick scalp downward? So quick scalp downward on gold. Not, I mean, scalp can be done anywhere because these are mostly based on very short-term time frames. But if you're asking for a clear opportunity here, yes, because we currently are at the 78.6 level, then we can track this. Which chart are we following? This one, right? Yeah. So because we are currently at the 78.6 level, we can track this counter for quick scalps because it will give us some very short-term selling opportunities. But I think it is risky. But anyways, scalps are like that anyways. Yes, we are at an important resistance level, 1926-ish level. So yes, if you do intend to analyze it on shorter time frame and you are able to decipher this leg up with even small bit of accuracy, some scalps may appear. But I personally will not recommend anything here, and I'm not really interested in gold as of yet or as of now, even for scalping. Right. So yeah. Anyways, hopefully that answers your question, even though I was not able to point out anything in specific. I wanted to check with you guys very clearly. What's your take on these webinars? Do you want me to continue doing them further? And well have you been able to capture the opportunities presented, given that most of you have attended at least 20, if not more, of these webinars, because most of these are familiar names here. And I would like to see comments from every single one of you here. Previous times I have just moved on from one chart to another, but we are at an important level, 50th webinar. I need clear answers from you guys. So, Luis, I mean, in clear terms, are you finding them beneficial, and do you want me to continue doing them? So, here are some comments. Let's check them. Charlie is saying, less, yes, please. And Philippe is also saying, yes, please. Okay. So is Luis. Okay, guys. So I have to make it very clear here that these webinars take up a huge amount of my time, right? First of all, doing the stream itself takes 1 hour, then sharing it on different medias take 30 minutes or so. And then at the end, preparing for these charts, it can take whatever amount of time it can take, 2 hours, 3 hours, 4 hours. And I'm doing it 3 times per week. So, long story short, it is taking a decent amount of my time. Firstly, I was not very interested in thinking of it as a business prospect, but now I'm thinking, why am I even doing it? I just started doing these things for the sake of growing the channel. It clearly has not served the purpose that well, because the channel is still not getting that many subscribers per webinar. Something suggests me that the YouTube algorithm did not pick it up, although you guys have done your effort. I know that. So I have to make at this point a decision. I am thinking, by the way, 1 second, there are some other comments. I missed them. CV Singh enjoys the webinar. Education and trades are good. Thank you, Steve. I appreciate your work. I mostly trade S&P and BTC's. Jill's comment, and there's another from Fraser. When the webinar is very helpful, Elliott Wave is great, but often tricky in practice. You are showing us how. Well, that's good to know, Fraser. Okay, so what I'm basically trying to say, guys, here is that as much as I love doing them, I am planning to implement a very small membership fees here on YouTube. I'm not sure how many of you will join in or how many of you are interested in it. From the comments, it looks like some of you would be interested. But once I start it, then it will be a little bit business focused. Basically, I will be looking for X number of people to subscribe within the next 10, 20 webinars. And if I feel like it is feasible enough, then I'll continue doing it. Otherwise, I will have to stop doing it. And currently, I have not fixed the price, but I'm not thinking anything huge. I'm just thinking around 10 bucks for the YouTube membership button. So I would like to ask you guys straightforward, because there is no, I mean, left and right business here. You guys know me too well. Would you be interested with a clear yes or no? Just let me know, so I do not waste my time checking how to include that button. I can just move on to another project. Philip is saying in. Let me see if there are other comments. I'll just wait a few moments here to see what other people are thinking. Again, guys, yes or no. There is no roundabout business. It's just a pool. I'm doing it publicly, but we need clear answers. Charles is saying yes, and Fraser is saying interested. Okay. And what about the other guys? Again, I'm also interested in listening the no's. All of you who are in the chat. Okay. So there is one no at least. So guys, thank you for being clear. So I'm not really sure where it will lead, right? But I think one second, let me put the phone on silent. But I think at least it's good that I have an idea that many of you are interested actually. So what I'll do is I'll run the membership. We'll do some webinars, and we can do one more thing. We can then start doing pools for paid members. That's basically just my idea of how I'll do things. If I get the participation, then we'll start doing pools for paid members. We can select one or two stocks or scripts near the weekend, and in the Friday webinar, we can discuss them as well, again for the paid members. So other than that, I personally think it is itself a huge value. Right, we have caught trades with 1,000+ points on S&P, and here and there we have caught so many, like 59 trades. Right, it's right there scrolling beneath your screens. So I think it's great value itself. And I personally have never been a fan of charging people for call services. So that's why I'm doing it publicly, and we are doing it as an educational service. So the idea would be that I'll run it near the weekend. I'll figure out how to do it. I think I have to just do 2-3 clicks. It's not much. And once it starts, those of you who have said in, I hopefully expect you will subscribe. Whatever the join button, I think it appears on the main page itself. Right. I'll also make an announcement on Twitter, and we will do at least 10 webinars, and then I'll decide if I want to continue the project. I think it's fair enough. What do you guys think? 10, or let's just say 15 webinars will do, right? I think 15 is good enough for a trial run. So let me know if you have any comments or ideas, if this sounds fair enough, or if there is something more or less that should be in it. Before we move over to the important charts where I will also show off a trade, I'll wait for a few moments for you guys to type in the comment section before while I load on the charts of S&P. I cut off here. I did ask something, but it looks like the chat is following its own direction here. Hello, Stock Hero. It looks like you missed most part of the webinar here. And yes, good morning to you. So I'll just rephrase the question again. I was thinking that the idea which I suggested of how we'll look to continue the membership, if you had anything to add to it, or how does it sound? I wanted feedback on it. Maybe I missed something. No, it looks like the chat is connected here. Okay. Well, hopefully you had fun there. Well, thank you for at least commenting, Luis. It looks like the other participants are not able to catch up what I'm saying, or for some reason are not commenting here. Yes, Luis, sorry, Charles, we are using a different streaming service these days, and it allows me to do some cool things like show up comments and do some ticker kind of thing at the bottom. Right. So, guys, it looks like I'll have to just run it and see. And if it works, it works. If it doesn't work, then not much point wasting my time here. Right. After all, I can do all this by myself and save a lot of many hours as I've been doing it for years. So with that, I would say let's just head over to our S&P chart, right? Not the kind of what do you call participation I was expecting from the chat after these many webinars. I have to say that. So there's the S&P's 500 chart, and as I was saying in the last webinar, I was holding short. One second. Since this price level, not exactly since this price level, this is around here that we suggested short entries here. Right, let me see if I can blow up the chart. Yeah, there it is. So since or near this level, we were suggesting that the market will continue down, right? And since we were thinking of more downside to follow, the minimum target, by the way, was below 39.20 level, right? So it did go lower. And if you guys remember in the last webinar itself, I was saying that I am personally expecting that this market will continue even lower. So I was holding my shorts even here. And the idea was that if it retests or touches these levels, then I will exit as a, what do you call, a trailing stop. So I have actually exited it. But my current idea is that this market is still going to possibly continue lower. So I am on the lookout for more bearish opportunities on this counter, right? And last time we discussed very briefly what I think the count is. And I think this market is possibly forming this kind of structure. So basically what I'm suggesting is a possible triangle structure. After the wave B, we expect a wave C down, right? That is basically what we are interested in, but it currently may go higher for the wave E. That's the only reason I exited. And that's why it's a wait and watch for much more possible selling opportunities. In case the wave B and C have already completed here, then the E will not be there. I mean, there will be an upward movement, but it will be impulse strongly headed in the upward direction, most likely, instead of a wave E in the upward direction. So, long story short, my bias for bearish movement comes from this triangle count. Let me just be very quickly there. Yeah, so my bias comes from this count, right? More upside movement. We again will look for more selling opportunities. And long story short, near 38.10 or basically near the last low is a breakdown or momentum kind of trade here. Okay, nothing much to add here. And given that I'm not seeing the response I was expecting in the chat, I'm not going to discuss the big trade which I pulled on Nifty, where I have made about 600% returns on the investments in the last 3 sessions. It was an options trade. So I'll just continue heading over to the chart with our usual Elliott Wave discussion. So the current bias was that I was thinking that this market is definitely bearish. Let me go to a little bit higher time frame just in case. Yeah, so there were two counts. One was what do you call? One second. So yeah, as I was saying, there were two counts, and both of them are suggesting bearish movement. And if you guys remember, I had already made the statement that we are expecting, or I was expecting more bearishness, and I was short on all the indices collectively, not on every single indexes, but net shorts I was holding. So this one I held on for I think 3 sessions, if not more. And since I was holding since the very peak, I was able to get very cheap prices for my option contracts, and I was in with a big position. And I have made, as I said very clearly, 600% return, literally. Right, a little bit more maybe, but I'm just rounding off the numbers. So what's the current outlook here, right? I'm just going to discuss it from the shorter term perspective, right? From this point of reference, around the price level of what is this? 17,804. It looks like we have an impulse headed in the lower or downside direction. It looks like we have the one complete here and two complete here, and the three is most likely over here. So I personally think that the three may have some more downside remaining, right? Whenever that completes, some pullback, which will be followed by another downward movement, or the another scenario could be that the three is over here and the four is over here, and this is just the last leg. So this is basically the area to remain what you call cautious. So that's why I booked out my profits, although I was thinking of holding them even more. But I mean, there is one point: you have to take the money, otherwise it will disappear, right? So long story short, I am still thinking that shorter time wise, I will look for more selling opportunities on this counter. And there's also the chance that this market will open gap down because it has closed below the much more important level of 17,000, right? So this is the quick outlook on Nifty. More downside possible, but there is no clear trade. If you are holding some shorts from the upper levels, then you must have already booked some profits. If not, then you should have booked partials and you could have held the remaining. But as I said, the movement has been so strong and the profit so big that I personally was not interested in holding it that long. And this brings our counter of number of big moves that we have captured so far to 60 out of the last 49 webinars. And I'm not going to discuss anything further here on Nifty. And I'm thinking of starting a new project on Nifty actually, covering more of the NSE side. And we will declare more of it in the upcoming days, most likely on Twitter and via the email subscriptions that I have. If you are subscribed to the mailing list, then you will hear about it from me. And I will decide about the future of this project as well. So for this webinar, let's first quickly end it with the BTC count. It has triggered our longs here. As you can see, we discussed in the last webinar that if this market goes to the level of or not the level of it, if it basically takes out the high above the level of 25,000, then it is triggering longs. And the idea was that probably it is doing something of the sort that this is the first leg up, this is the second leg down, and this is now following the third up and the fourth down and the fifth up. So basically, this is the momentum wave, and this is expected to go much higher, right? And because it is expected to go much higher, we were interested in taking possible longs above this counter. Just to keep in mind, I do not trade BTC. Of all the things I discussed, that's the only chart I do not actually trade. So I'm not much interested in any longs here, but technically speaking, that longs are triggered now, we will look to hold the position with a stop near the 20,000 level. Technically, it should be the level. Of course, this big stop loss is not very ideal. So based on your risk management size, you might, and your position size, of course, you might want to adjust it. But the stop literally comes there, and the target levels, we can look for 161.8 levels and at least 1:1 levels. So we can just quickly check where they're incoming. So these are the levels we expect the market can hit. Firstly, around 29,400, followed by 35,490. So that's about it, guys, from the BTC analysis. And I must say, after doing these webinars for quite some time, the participation was not that great. And even the feedback today was not that great. I was thinking of discussing the whole Nifty trade in much detail, but the participation was just not there. So maybe I'll think of closing the project, and whatever the updates, maybe if I continue the webinar, you will hear the announcement. and if I close the project, you will hear it on Twitter. Right. That's about it for now, and take care, guys.